Today I want to address this news article that's titled, "What is negative interest rates?" I want to cover what it means for the average person like you and me, how you can benefit from it if you have no money, or if you've got $50,000 in savings in the bank. And why I'm super happy about these interest rates, because as the 1st of August, I'll be getting an extra $70 in my bank account for free each week. Roll intro. What is up everybody? Welcome to another video where I talk about personal finance, property investing, and my journey in the stock market as I try to figure out how to become a millionaire. If you're new here, my name is Gifford. Feel free to subscribe. Also, if you could kindly hit that like button, it helps me out massively to grow the channel and for the YouTube algorithm. Now with that said, let's get on with the video. So some people might not know that this interest rate change has the potential to save you a lot of money or to borrow money from the bank at the cheapest rate that it's ever been possible in New Zealand or around the world. So let's start here where I will summarize this news article from stuff.co.nz, which is a New Zealand news article website. Due to the global pandemic, which is a 1 in 100 year event, the New Zealand has lowered its official cash rate to help with the economy. By lowering the official cash rate, this has made it easier for businesses to borrow money so that it can help kickstart the economy. I just want to add that this recovery will be long term, so I assume it'll take about 5 to 10 years. This then leaves us with a question: what happens when it gets so low that it tips over to the negative? Logic would suggest that if the rates went negative, the banks would start charging you for having your money in there instead of getting interest from your savings. There's no need to panic. As in the article, some countries are already doing this, but it is also unlikely to happen here in New Zealand, and I agree with it too. An additional point to this, you and me are retail customers who pay an additional fee on top of commercial rates. So even if it did go negative, you and me would be unlikely to pay because our interest rates would still be over zero. The rest of the article then talks about, would the banks give us money to take loans out? Would the banks lend more money? To which I'll answer, we are not there yet. There's no point going over it because even the banks don't know, as we've never been there in our history. So now that we've covered that, how can you benefit from it? Well, you can borrow money at the cheapest it's ever been in history. This is the best time to acquire good debt. I just want to make sure you understand what good debt is. I'm 100% behind the idea of saving up your money first before buying anything to save on interest rates. But if you absolutely have to spend money, right now is 100% the time to be borrowing this cheap interest rate. So good debt is borrowing money and putting it into something like a business or another investing venture where you can pay back the original loan and also make money on top of that. Like putting $20 on a horse you know will win and returns you $100, except that's gambling and that's not really good debt. But you get my point. Other expensive items like buying a reliable car so you can get to work and using that low interest rate. Personal loans are halved interest rates is what they used to be 10 years ago. The key takeaway is to borrow cheap money to make you even more money. Now let's go over how I will be benefiting from this and getting $70 each week for free, which I will probably spend on some stocks later on. So we know that credit cards and personal loans are the cheapest they've ever been. But the lowest rates have been property interest rates. So as the 1st of April, my interest rate on my rental property will be going 4.24% to 2.65%, which effectively saves me around about $70 each week. So for the people that don't know how mortgage rates work, don't worry, I got you. I'll be releasing a video, hopefully in the next month, on the requirements and how to buy your first home, and I'll explain how mortgage rates work. Moving on, let's have a look at this graph and compare exactly how these low rates are compared to the current rates. So as you can see, in 2008, the floating rate 12 years ago was over 10.5%. So basically, you're getting a 75% discount to borrow money in 2020 compared to 12 years ago. And this is how smart people turn into rich people in times of a recession, by borrowing cheap money and making even more money. So let's get out Carl's mortgage calculator, which I'll put right here, and work out how we're going to save money from these cheap interest rates. So we can see here with paying an interest rate of 4.24 on $360,000 that the payment is $407.65 per week. Now we compare that with the new interest rate of 2.65%. On the same $360,000, we can see that it's gone lower by $70 and we now only need to pay $334.49. So just for fun, we're now going to recalculate the same figure, but we're going to use an interest rate from 12 years ago, which is 10.5%, just to show you how big a difference it can make. Just a quick disclaimer, it would be impossible for this rate to ever be this high during this time. So using the interest rate of 10.5%, using the $365,000 loan, we can see that is a whopping $757.39, which is about $423, which is pretty much double the amount. So as you can see from these examples, interest rates play a massive part in generating wealth, especially for someone on lower income like myself. I really need to take advantage of situations like this if I'm ever to reach my $1 million goal. Okay, so that's negative interest rates. I hope you found value in this. Hit that like button to help me out with the YouTube algorithm, as it helps the channel out massively. If you haven't done so already, feel free to subscribe. Have a good day. I'll see you in the next video, and goodbye.